TROW Price stock, ticker symbol TROW. This stock is up 7% year to date, underperforming the S&P 500 slightly, which returned nearly 13%. And TROW stock reported a beat on EPS and revenue, and for the upcoming earnings, all analysts expect another beat. People love TROW stock for different reasons, and one of them is the dividend. And I understand why, with dividend yield at 4.3% and 37 years of dividend increases, which of course is really impressive. However, if we take a look at the total returns in the past 5 years, we see that TROW stock massively underperforms the S&P 500. But the interesting part is that they used to crush the S&P 500 up until 2022. So could this be the perfect time to buy TROW stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does TROW do? TROW Price provides assets management services for individual and institutional investors. It offers a broad range of no-load US and international stock, hybrids, bonds and money market funds. Diving into the earnings, we see that AUM, or assets under management, was reported at $1.54 trillion, with an average of $1.48 trillion. To me, this looks really good, and this is also really important to understand. If the overall market does well, TROW does well. It kinda moves with the market. And of course, when the market falls, then TROW falls even further. The effective fee rate was reported at 42.1 bps, which is a small decrease year over year, so that's something to keep your eye on. Net revenue was reported at $1.75 billion, also up a decent amount year over year. But more importantly, EPS is up big time, and that's because expenses is down, meaning higher margins. In here we see the assets under management per year. As you can see, it is increasing pretty steady and consistent. But ever since 2022, when there was a correction in the market, TROW went down as well. From there it recovers pretty steady and consistent. And remember that I showed the total returns where TROW used to beat the S&P 500 big time, and ever since 2022 it didn't anymore. This is one of the reasons why. In here we see the operating income and net income together with the margins. I think it is really good to see that margins are increasing big time. To me, this is one of the more important things together with the assets under management. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. TROW is a 25 billion market cap company. PE ratio is at 13.3, which could indicate that they are undervalued. Later in this video I will show you my 3 price targets for TROW stock, so make sure to watch until the end. Revenue is at 6.7 billion, and in this graph we see that revenue went up in the long run. And again, we see that 2022 had a big impact on the company. But most recently, they are recovering again. And it is the same story with the margins. It went up steady and consistent, up until 2022. From there, it jumped off a cliff. And most recently, we see that margins are recovering again. So to me, this looks really good in terms of potential. For the EPS, it's pretty much the same story, nothing really special to add here. Analysts expect that in 2024 the EPS will increase at 18%, which is a high number. From there they have mixed feeling with almost no growth up until 8% growth. Down the line, it is expected that EPS will kinda stay flat in 2028 versus 2024. For the revenue growth, it is pretty much the same pattern. However, the 2028 is significantly lower in terms of revenue estimations than 2024. Return on assets is reported at 15.4%, which is a great number. The return on equity also looks really good at almost 20%. But the most important number here, return on invested capital, is reported at 10%, which is a great number in general, but it is much lower versus the 5-year average, so that's something to keep your eye on. Current ratio is at 3.8, which is a high number, so definitely keep an eye on this number as well. But here comes the great part. Right now TROW has 380 million in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. TROW has 2.4 billion in total cash, so they can pay down all of their debt without any problems. This is really impressive and comforts me a lot. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, but it is not really steady and consistent. And it is also decreasing for 2 years in a row now, so this is also something to keep your eye on. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in a company, increases the EPS, lowers the P/E ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 4.3%, which is a great number. Annual payout is at $4.96 and payout ratio is at 59%. I prefer 50% or lower, so right now they have 41% left in cash to pay down debt, do acquisitions, buy back shares and all other things. The 5-year growth rate is looking really good at 11%, and they have increased the dividends for 37 years in a row, which is also really impressive. And if you take a look at these numbers, the dividends paid since 2015, you see that TROW always increased the dividends at a decent pace. And on top of that, in 2015 and 2021 they paid a supplemental dividend. To me this looks really good. I expect the growth to return as the company recovers. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that payout ratio increased quite a lot ever since 2022. But from there it is coming down again as the company recovers. I expect that in the coming year it will go down under the 50% again. And in this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to increase at a decent pace from here. Overall these dividends look really good to me, but how about the historical returns? I decided to compare TROW stock with the overall market, in this case the S&P 500. On the 5-year chart we see that TROW massively underperformed the S&P 500. In total TROW returned 32%, and keep in mind this is including dividends. The S&P 500 is at 102%. On the 1-year chart it is pretty much the same story, with TROW returning almost 7% while the S&P 500 is at 27%. A big difference. On the 6-month chart is getting pretty interesting, with TROW having a slightly better return versus the S&P 500. And it kept on beating the S&P 500 throughout the whole time. On the 1-month chart it is again TROW that is beating the S&P 500 slightly. Bottom line, the S&P 500 was a better choice in the long run, but in the short run it seems that TROW is getting some momentum. So, could this be the perfect time to buy TROW stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 4, 6 and 8%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 29, 32 and 35, as I expect that this will recover in the coming years. For the free cash flow margin, I'm putting in 26, 28 and 30%. For the PE ratio, I'm putting in 12, 13 and 14. For the price to free cash flow, I'm putting in the same numbers. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, TROW stock is around $115. I hit analyze, and we see a lot of green numbers. We have a low price target of $90 to $100. We have a mid price target of $160 to $132, and we have a high price target of $149 to $173. And to me, the mid to high price target is the most justified here, meaning the stock is undervalued based on these numbers. So what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on TROW is that it took a heavy hit in 2022. There is no denying that. But what I like most about TROW is that they are recovering at a pretty steady and consistent pace. The assets under management is looking really good right now, and margins are increasing again. The fact that they can pay down older debt without any problem comforts me a lot as well. From a dividend point of view, things look really good. Payout ratio is decreasing. The growth in dividends is also really impressive. From a value point of view, things also look pretty good, with a price target range of $116 to $173. For now, I keep buying TROW stock, since I think it is an amazing company, and the stock looks undervalued to me. What's your take on TROW stock? Let me know in the comments down below. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and it did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.